All right, that's it, folks. That's all she wrote. It's a wrap. December 30th. This is the last day of the trading year, and we ended up a little bit on the weak side. But actually, I was a little bit surprised to see the market under pressure most of the day, because today was, that we got the normal first of the month payments today. They went out today on December 30th because January 1st obviously is a holiday. So that's like about a 65 or a 69 billion net positive flow, which now if you look at, and so on a day like today, normally what you see is a pretty strong market. I mean, these first of the month payment days, these are the biggest fiscal flow days, pretty much of the year. Not of the year, but every month. All right, so anyway, I did send out an email to my subscribers during the day when we were down, and I said, I feel pretty confident that we're going to get a rally into the close, which is exactly what happened. I think probably today, the reason for the weakness was, the final burst of year-end tax selling. Okay. So it was, given that, and I understand it, that wasn't a bad close. I mean, we did have that rally, and if we go over the numbers now, okay, there's about 63 billion that we still needed to recover from that December 15th quarterly corporate tax drain. Today, almost certainly wiped that out. In other words, the total amount has now been replaced back into the economy. So it took a couple of weeks, and that should set us up for a positive tone going into February 15th. Why do I say February 15th? February 15th is a quarterly interest payment, and that usually caps the quarterly, spending surge. I mean, I've been noticing now that even though the next tax drain doesn't come until March 15th, I've been noticing that markets peak out right about the time of, that big spending boost that we get off of the quarterly interest payments. So I'm looking around February 15th, if you're looking to trade this, I think 2023 is going to be a bullish year. Biden just signed that omnibus spending bill. By the way, he just signed it. I mean, that thing was done last Friday. I think he signed it only yesterday because he's down in St. Croix on vacation, and he just got around to signing it. And again, even once it's signed, it doesn't mean like there's this tsunami of money that goes out. I mean, we should start to see it in the daily flows, as we progress into the year. So, as I've been saying, I think 2023 is going to be a good year because we're going to see some significant boosts in the fiscal, right? I mean, we have that spending bill that they just signed, which is going to take us through to the end of the fiscal year on September 30th, okay? That's got increases in it, like it's got a military budget increase and some other things. We got the big Social Security increase, all right? And of course, what I've been talking about the whole time is the interest rate, the interest income transfers as a result of the Fed's rate hikes. So I just think it's going to be positive, and against a backdrop of extreme negative sentiment, okay? I mean, we've had negative sentiment now for the last 59 weeks, basically. So extreme negative sentiment, and you have what looks to be a very significant increase in the fiscal support in 2023. And personally, I love the fact that, nearly every single economist is calling for a recession in 2023. I mean, I literally love this. I mean, there's no better place for me as a contrarian to be than, when you have a preponderance of market watchers, economists saying, and non-economists. I mean, you got Elon Musk, you got all kinds of people saying, it's going to be terrible, it's going to be horrible. I mean, for me, that's the only way to make money long term. I just watched an interview. I don't know when it was dated or when it happened, but it was an interview with Carl Icahn. Carl Icahn, of course, like a legend of Wall Street as an investor, as an activist investor. And I mean, he put it very simply. He just said, you know, the way to make money, big money, is to buy when everybody hates it and then to sell when everybody wants it. And I mean, I can think of no better time than right now as a situation where everybody hates it. The other thing Icahn said is like, it was always in his experience that the biggest money he ever made was holding on to positions for like 5, 6, 7 years. I mean, those were exactly the numbers he threw out there. He said, it's really hard to do, but that, he said, was the strategy or the times when he made his most money, like buying into very undervalued situations. You know, sometimes as an activist investor, he would be able to get a seat on the board or get several seats on the board and look to make some kind of turnaround in a company. But the message was clear. It wasn't just specific to, you know, individual situations. The message was clear. And that message was, you got to buy when everybody hates it, and you got to hold on until you get to the point where everybody wants it, and then you sell it to them. I mean, it sounds very simple, but like he said, it's a hard thing to do. I mean, we work against ourselves. And this, in my opinion, is one of the reasons that most investors, they fail, or they don't really make a lot of money, or they don't achieve that much success, is because it's not so much that their strategy is wrong. I mean, they work against themselves. It's hard to stay disciplined and patient in a position. I have a short dollar position. As a matter of fact, if you go back, maybe last week or the week before, I said that the dollar's going to be, and this is very short-term trading. I'm not trying to equate this or make this equivalent to what he was saying about a 5, 6, 7 year position. I'm basically just, scalping. But, today I had a very big profit in that position. The dollar was down. And I was itching to take that profit, even though when I got into this trade, I said, I'm holding this until February 15th. Okay, that goes back again to what I said earlier about that's usually the peak in the fiscal flow for the quarter. And basically the trade is based on an expanding fiscal, more dollars being pumped out there, an expanding fiscal into the 15th. And I said, I'm holding this trade. And today I was just itching to take profits. And I don't know, if I'm going to stay in it until February 15th. Because I got a nice profit in there. Anyway, so let's get back to the situation. The December 15th tax drain, which took us down from the deficit, the federal deficit was running at about 104 billion on December 14th. It went all the way down to something like 21 billion. Still a deficit, mind you. So it wasn't like a terrible, we've seen some really bad drains over the course of 2022 where, we had like a big deficit that swung into a surplus. A surplus is like, you talk about the swimming pool. I mean, that's draining it down below the level of the bottom of the pool. That's like all the water is out and then some. But we didn't get it that bad. So we went down to like a 21 billion or 23 billion deficit. We're back up to around a 40, 43, 44 billion. And then if you count today, which again, I don't have the number for today, but in general, these first of the month outlays usually is a net positive flow of, let's call it 65 billion. So that would put us right back up at around 105 billion deficit. So that's not bad considering that it was a tax drain month. All right. Last month we had something like a 200 something billion. Yeah, in November we had something like a 200 something billion deficit, of course, because we had the quarterly interest payment. And we're going to get another one of those in February. So, that's how it's looking right now. I mean, we should have a good January, and we should have, a good half of February. By the way, February, I believe it might be also around the 15th. I have to check out the date. But in February, we will get another Fed rate increase. So that, that also aligns with, a short-term peak in the market there, because that's going to obviously freak everybody out like it does all the time. But we got time to talk about that, and we have time to strategize on that. But anyway, I want to wish everybody a very happy and healthy new year. Frankly, I just can't wait till all this is over. I mean, every year with the holidays and New Year's, I just want to get through it and be done with it. And I happen to think that New Year's Eve, I don't know what you guys do on New Year's Eve, but I just think, me personally, it's the most overrated experience ever. You just feel obligated, like you have to go out, get drunk or whatever. I stay home, cook a nice meal. I've done it all. Maybe some of you watched the ball drop in Times Square. I could tell you a story about that when I was in college, and it was like, 1976. And back then, it was like a riot down there. There were practically no cops. They didn't, now if you go down there, you have to get there like early in the day. You get penned in by the police. You can't move. You got to stay there, whether there's no booze, no alcohol. When I went in 1976, first of all, Times Square was nothing like it is today. Today it's very corporate, it's very developed, it's very touristic. Back then it was like sex shops, peep shows, the worst sleaze you could imagine. And then that ball coming down, and it was just a pure free-for-all where everybody was just in the streets drinking out of bottles, whiskey, wine, no cops, but everyone had a great time. It was a completely different, none of this like fancy entertainment with big name stars like they have right now. It was nothing except a big raucous crowd, and I'm happy to say I got to experience that, because that just doesn't happen anymore. That doesn't happen. Maybe some of you are thinking, well, why would you want to go down there when it was like that? But that was a crazy, crazy time. It was a lot different than what it is right now. I did all that stuff, and years in ski resorts and stuff like that. When I was living in Switzerland, I'd be up in either Gstaad or Verbier. And so I'm good quiet, man, and I just want to get this over, and let's get into the new year, and let's make it happen already. So to all you people out there, happy, healthy new year. Enjoy whatever you choose to do. Stay safe, and I'll see you in the new year. Take care. Bye.